Ladies and gentlemen, welcome. This is a new little series I wanted to start on this channel, namely several videos on the topic of investment banks. Okay, and in this particular video I will just give you a little bit of an overview. What are the different components of an investment bank? What does it do, etc. In the future I will go a bit more into detail. I will talk about specific investment banks and so on. It's important to understand those entities if you are involved in the market. It's a bad idea to ignore investment banks and what they do. They are a central part in our financial system, and we had a lot of changes as well in the last years and since the last financial crisis. But I will go into depth regarding those topics in other videos. Here we just try to understand what they do, how they are structured. Now please be aware there are slight differences between the different investment banks which exist, but generally speaking you will always find some kind of structure like here, and let's go through it. First of all, we have the big division called global markets or sales and trading or securities in some other banks. This division deals with everything around trading. Okay, so regarding equities, stocks, we're talking about the secondary market, the stock market. We have market making activity by the investment bank. That means if a corporate client or a pension fund or a special purpose vehicle, etc., wants to buy or sell shares, they can do so with the investment bank conducting the market making, giving them a bid and an ask price for a certain quantity of shares. So that means that this division will run several books on the securities, where it will have the opposite positions of the client. But of course, the traders have a choice whether to hedge, whether to buy and sell to other market participants, etc. A lot of market making these days is algorithmic, so that means we don't have human traders sitting there and clicking buttons all the time. But to this date, we still, have the scenario where a client may call and execute orders, and the trader then gives a quote and does a trade if it's confirmed. Okay. In the last 10-20 years, we saw an incredible increase in derivatives, and we are talking about all kinds of products, not only options, futures, or CDOs. We talk about any kinds of complex products, structured products included. This has been trend, so we are not talking about plain vanilla products only, such as stocks, bonds, ETFs, futures, options, etc. We talk about more complex derivatives, and they have their own divisions. Now, it should be noted that within this division, we may have teams which actually create such new products and place them on the market. Okay, and then the bank will conduct the market making for those kind of products. So we have all kinds of structuring going on. Okay, the bank either creating customized products for certain clients, such as corporates. Let's say a corporate wants to hedge currency risk in a certain manner, or it wants to protect itself against default, or it wants to improve its balance sheet, etc. There are many, many different scenarios. The bank will try to create and pitch a product which fulfills the need of the client and will offer the trading of it as well. We are talking about massive volumes here, but that's for another video. Okay. Now, on the other hand, we have the investment bank division in an investment bank, the iBank division, IBD, sometimes called M&A division. And okay, so what they do is, for example, if there is a company going public, okay, and selling their shares on the stock market for the first time, and they conduct an initial public offering, an IPO, the investment bank offers to do that process for the client at a fee. Or if a company wants to buy another company, or wants to sell off a division, or wants to do a joint venture or merge with another company, this is also conducted by the investment bank division, among other things. Now, you see I drew this red line here. This should remind everyone that to date we have a Chinese wall between those two divisions. What does that mean? That means that by regulation, the investment bank is obliged to make sure that no information crosses between those divisions. Why? Imagine we have an upcoming merger here, and one company wants to merge with another one, and both are publicly traded. Well, this could be quite exclusive information. If this information would leak to the global markets division, it could be that trades are taken on the basis of that information, which is not allowed. You understand? So we have investment banks even having physical divisions within an office building. So people who work here can only enter certain areas. People who work here can only access certain other areas. They can't just come into this office. Okay? Now, the reality regarding this information, well, that's another topic, I guess, but I'm explaining you here the official arrangement. Okay. Then we have the asset management division. That means that the investment bank conducts portfolio management. This could be for high net worth individuals, ultra high net worth individuals, for corporates, for pension funds, etc. So they run the portfolios for those kind of clients, and they have portfolio managers managing those portfolios. Then we have the research division, which contains analysts who actually produce research. Okay, they analyze single stocks and create reports. They analyze instruments, markets, anything you can think of. This research is then used either internally by those kind of divisions here, or some of the research in some cases may be sold externally, etc. Okay. So these, the people working here, they will not conduct trades themselves or anything. They will concentrate on giving an opinion analysis on an asset, on a product, okay? But as you can imagine, this is useful for people who work on the sales and trading side. They get all the information condensed, for example, in the morning. Sometimes there are morning meetings, and research analysts present their newest research and ideas, etc. But I should also explain that on the sales and trading side, for example, we have sales traders who also generate trading ideas. Yeah, so there we have divisions here which create trading ideas. This may or may not be used by traders in any shape or form, or by portfolio managers in any shape or form. So to understand the difference between those two, the asset managers are more concentrated on the portfolio level, less on the single product level. They are concentrated on, okay, what is our portfolio composition? What should we change? What should we increase, decrease, buy, sell? Should we use derivatives? Should we hedge against certain risks, and so on? While in the global markets division, we have people actually monitoring and doing the market making of products, creating products, putting them on the market, running a book for those products, okay, and clicking the button of the actual trade execution as well. Now, as you can see, I also emphasize the algo trading division. Officially, this one is often under this part of the bank. They are focused on completely algorithmic trading, okay. There's no manual trade execution. They run algorithms. This could be either in a market making context or another context. Let me just leave it at that. Okay. So generally speaking, in all kinds of investment banks, whether top tier, second tier, third tier, you will find some kind of variation of those four big divisions. Now, I wrote those three here. This is new stuff. First, retail banking. That was unthinkable until a few years ago, but we know that, for example, Goldman Sachs has created the Marcus Bank, and they actually deal with retail clients. This is very new. Okay, that was unthinkable. Some banks also have a separate corporate or merchant banking division, which may give loans to companies, even mid-sized companies. Okay. So, and then the newest thing we have also new divisions which actually look at creating crypto coins for the bank. This is just very new. Now, so to summarize the whole thing, what does a bank do? The investment bank. The investment bank is a different entity than any normal commercial bank, okay? That's what people often get confused by. So if you go to your local bank, okay, the bank has your savings account, your current account. It may give you a loan as an individual. It may give you a loan as a small or mid-sized company. Or, you know, it may offer certain products to you, yes? Some banks, obviously, they also offer, like, you know, stock trading or bond trading to you, etc. But normally you have the commercial bank doing what I said, and then a broker doing, like, you know, the actual market making for, let's say, stocks you want to buy and so on. However, an investment bank is actually involved in all the different cycles, the financial cycles of corporate activity. You understand? And let's go through it, like from small to big. So if you have a small company, okay, and the company wants to become bigger, and they decide to merge with another one, this could be a client of the M&A division. Typically, these are big companies, but, you know, even small companies. Or you have a small company that wants to go public after it performed well for some years. They call up the investment bank and say, look, we want to go public on the stock market. What can you offer? They may tell, look, this is the process, and the investment bank collects a fee. These can be huge fees. They may be cyclical because we have economic cycles where companies tend to merge and acquire a lot. And then we have periods where this happens less. But the investment bank will advise those clients in those situations, yeah? Going public because they're big enough, or buying or getting bought by someone, or spinning off a division, okay? Or issuing bonds, okay? These are all potential clients here. Now, for bigger high net worth individuals or companies, they may have cash and they want to invest it. They need professional investment advice. They need someone to run portfolios for them, or a pension fund, okay, which has to manage money. They can be potential clients for the asset management division. Yeah, they may contact the bank and say, look, we have these funds. We want to be invested in the market in several products. What can you do for us? Okay. When it comes to big players in the market who want to buy stocks, let's say hedge funds, okay? Let's say Bridgewater wants to buy stocks in Amazon or whatever. Okay, so they may call up the global division for global markets and say, look, we want a quote from you. What can you offer? At which price can we buy these stocks in the secondary market? Okay, and they may assist them accordingly. Or you have a big company and they say, look, we have this kind of problem. We want to hedge away a certain risk factor. Can you create a product for us which will do that? Yes. They would go to this division. Then you have external players also who may say, look, we want to have more insights into the market based on really solid analysis, and they may be clients to buy research. Happens less these days, but obviously the research will also help the other divisions. You understand? So all these kind of corporate cases are basically all these corporate services are offered by the investment bank. And as you can imagine, this can be massive business, because we talk about big players doing big, large transactions. Those large transactions entail a lot of transaction fees in the millions and billions. Okay, you can imagine what kind of amounts we talk about when a big hedge fund, a multi-billion hedge funds, for example, buys a big position in a publicly traded stock, a lot of shares. You can imagine that, like we're talking about big money here. But the same is true for M&A. If there's a company and it wants to go public after many years of being private, we're talking about big money. Remember Facebook, the Facebook IPO, for example. Yes? If a company wants to buy another one, we're talking about big money as well. Okay? We're talking about amounts in the billions of dollars. If a big company wants to issue bonds, okay, and sell them, there can often be clients where we're talking about a multi-billion-dollar amount, all right, and the fees are accordingly. Yes. If a big pension fund needs to be invested in the market, okay, and places the money with a bank to be managed, we talk about big money there as well. So we talk about huge transactions in the financial markets, whether it's the primary or secondary markets, or whether it's even complex derivatives, whether it's even customized, tailored products. We talk about market making, algorithmic as well as manual, filling client orders, giving price quotes, running trading books, hedging. We talk about in-depth analysis of assets, products, companies. Okay. So basically, one should not ignore those kind of entities and what they do in the market. And this affects all financial markets. Okay. Whether it's stocks, equities, bonds, derivatives, etc. Okay, so I think for now this is enough. I think it's a good overview. If you have other comments, feel free to write. Okay, if you agree with something or disagree with something, please feel free to post. If you have questions, also feel free to post. I wish you all the best. See you next time.